In fact, before we even get into the retail sales numbers, I'm looking at this local currency, 8.28 to the dollar. I think beginning of last week, if I had said to you 8.28, you probably would have said there's no way. Are you surprised?
Yeah, it's been all over the place. I mean, earlier today it was, close to 8.40 sort of thing. So
I know, absolutely.
It's really been very, very volatile. But I think it's a function of global markets that are very uncertain of what's happening out there. And that's really a function of big structural changes in the global economy, which, continue to actually confuse and are generally actually relatively negative, unfortunately.
Absolutely. So, when you have a day where you see retail sales exceeding expectations somewhat, only just, I mean, we came in at 6.8% year on year in March. And we're looking at a month-on-month number which is slightly lower, but still we're looking at decent levels here, Dennis, and the truth is the consumer is not looking all that bad. What is then this spell for the core inflation scenario versus the headline inflation scenario versus the monetary policy decision that needs to be made?
Yeah, I think the problem in the economy at the moment is not on the retail sales side. In other words, the consumer is actually spending quite a bit. I think that spending is being supported by very high salary increases in the public sector in particular. But the difficulty is if you look at manufacturing and mining, those two sectors, more on the output side of the economy, are still under some pressure. So we're quite good at spending, but we're not that good at producing at the moment. And obviously the production numbers being more influenced by what's happening internationally. So it's a confusing picture for the Reserve Bank because, obviously they'll be looking at the retail sales numbers, they'll be looking at the credit numbers. There'll be some concerns around that, but at the same time, things don't look all that healthy from an underlying economic point of view.
Absolutely. I mean, Dennis, if we look at this, retail sales number, 6.8% year-on-year growth, it's not nearly, as high as the, 14, 15% level that we saw in 2006 and 2007. Are you saying that, can we say that this is more of a comfortable position and, what kind of risks lie ahead for the consumer? Because we're benefiting from various things, and one of those things that we're benefiting from is the fact that we've got more access to lending and more access to credit, and this is being reflected also in the private credit sector credit extension numbers.
Yes, but one would have to say that, for this stage of an economic cycle, things like credit are not rising very rapidly. Normally you'd be well into double-digit territory for credit to households, and that's not the case at this point. So, I think the Reserve Bank will take a fairly neutral sort of view on what's happening in the domestic economy, but will still be very concerned by what's actually happening internationally, and consequently they'll probably maintain a neutral stance.
Yeah, absolutely. So let's look at what you're expecting from the retail sales number going forward, Dennis. Do you think that we could actually see a number closer to 10% as the year goes on? Again, when you see this political scenario on a global level, this might just create a bit of risk aversion. We might see a bit of a softening in South Africa's growth. Would you say that the consumer is going to be part of that softer growth?
Yeah, I would actually think that we'll probably see weaker growth going forward, and that for the year as a whole we'll see closer to sort of like 5% growth. I think a lot depends on the public sector wage settlement, which has been, as I said, the big driver over the last 2 years has really been what's happened in the public sector side rather than what's happened on the private sector side. But one must also bear in mind that inflation is quite a bit higher, so that eats into personal incomes. And obviously that has to be then supplemented by credit to actually drive consumer spending going forward, and that's a function of confidence. And as you say, there's a lot of things that will make consumers cautious, not least the fact that the employment market is still very shaky.
Absolutely. So, Dennis, let's touch on that cautiousness and what we see coming through, in China, and then what we see in the US, and the fact that we're worried about Greece. Are you overall optimistic that things are going to be resolved over the next couple of months, or would you say that you are far less optimistic and that we might just see the fallover of the euro and the fact that Greece might actually leave the eurozone? I mean, what is your scenario that you've actually priced in?
No, look, I don't think that we're going to see a resolution to the euro crisis anytime soon, because fundamentally it's about fiscal sustainability in these affected countries, and that's really a function of economic growth and interest rates, and both of those are moving in the wrong direction. So it's really a question of is there going to be further default within the system, or are we going to see the system break down? I would actually guess that the former is more likely. But that's going to be a long process. It's going to take many, many years. The markets are going to go through bouts of significant sort of risk aversion, and we're going to see very weak growth out of the EU for quite some time. So that's my scenario, but I'm not looking for the disorderly breakup, which a lot of people are now expecting as a matter of course.
Fantastic, Dennis. We have to leave it there. Thank you so for joining us. Great to have you on the program.